Good afternoon, ladies and gentlemen. This is Vikramjit Bedi, tax partner with ASA. I welcome you to our Road to Recovery series of panel discussions. We expect our future actions to be impacted by our learnings from this crisis, and these would play out as we set out to achieve accelerated recovery as well as build stronger barriers against future risk. Today is the second of our five-part series where we will be covering tax planning, getting up for the future. Our panelists will be discussing strategies for revival in this evolving taxation landscape. A little bit about ASA and Associates and our guest today. ASA and Associates is a 30-year-old accounting and consulting firm with a team of over 700 professionals spread across 8 offices in India, besides a well-oiled network of national and international affiliations. We work with our clients, many from overseas, to help them set up offices and factories in India, find partners, take care of their taxation, audit, accounting, and business support requirements, GST advisory, risk advisory services, and also help them out with restructuring and liquidations as well. Chairing our panel today is Sanjeev Chaudhary. Sanjeev is a fellow member of the Institute of Chartered Accountants of India with 38 years of post-qualification experience. He recently retired from BSR & Company as a tax partner after close to 20 years. He is a law graduate, an insolvency professional, and also a member at the International Ethics Standards Board for Accountants, New York. Our first panelist today is Mr. Raj Gandhi, who is the president and full-time director Varun Beverages Limited, which is the second largest franchise outside of the US of PepsiCo trademarked brands. Mr. Gandhi is a chartered accountant with over 40 years experience across M&A, strategy, diversification, expansion, taxation, treasury function, and investor relations. In his 27 years at Varun Beverages, he has helped take the company public and now sits on the boards of several RJ Corp group companies. Our second panelist, Somajit Malik, who currently leads the tax function at Airbus Group India, a global leader in design, manufacture, and delivery of commercial aircraft, military transports, helicopters, satellites, and launch vehicles, as well as providing data services, navigation, secure communications, urban mobility, and other solutions. A chartered accountant with close to 15 years experience in taxation, comprising transfer pricing, corporate tax, and indirect tax. He has previously worked with Big Four accounting firms and MNCs. Our third panelist, Arvind Singhal, is Head of Tax and Company Secretary at RBS Services India Private Limited, part of the UK headquartered bank NatWest Group. RBS India provides services in the nature of technology, finance, operations, risk, etc. to its group entities. Arvind has 22 years experience in taxation and covers management of tax and regulatory affairs, as well as acts the company secretary at RBS India. During his tenure of 15 years as a consultant, he has extensively handled corporate tax, international taxation, and regulatory matters of various clients. Our final panelist is Sunil Arora, who heads the direct taxation practice of ASA at New Delhi. He carries rich experience in devising transfer pricing policies and defending them before the tax authorities. With over 20 years experience on international taxation, Sunil has advised several foreign companies on operating strategies in India, structuring issues, tax planning avenues, and various other facets of cross-border taxation. Now, before we begin, here are a few instructions for the webinar. Please note that all the participants will be in listen-only mode throughout the webinar. If you have questions or comments, please put them in the questions section in the chat, which will be visible to you at the right-hand corner on the top. The presentation will be followed by a Q&A round. A link with the recording to this webinar will be emailed to you tomorrow afternoon. Also note that each of these 5 webinars have a separate link that will be emailed to you on the day of the webinar. Kindly reach out to us if you are having any difficulty with this. Thank you all, and over to you, Sanjeev.
Thank you, Vikram. A very good afternoon to the panelists and the audience both. I think the plan which ASA has on these 5 webinar series is, I think, very timely, as the title is Road to Recovery. I think in the early part of this calendar year in January, nobody could imagine as to what is in store for all of us 3 months down the line or 6 months down the line. I do recall the date, I think it was 23rd or 24th of January when the first time we heard of this virus. And I think it hit India much more in the first and second week of March. And then also I think all of us felt that it should take about 3 to 6 months and things will be back to normal. It is close to 7 months today. The 25th March was the first lockdown date, and 7 months have passed since then. So many changes have taken place in these 7 months that are absolutely unimaginable, unprecedented. And I think everyone is living from day to day as to what is in store for us today, and keep planning and keep looking at the changes. Tax has undergone a lot of changes in the last 6 months. You have Vivad Se Vishwas, which was introduced much earlier, but again, it is continuing as we speak today. We have faceless assessment, faceless appeals. We have changes happening all over actually. And as the lockdown is being lifted, and as we heard our Prime Minister yesterday, he made a very clear point saying the virus has not gone away. It is just that the economy is opening up and we need to be careful as we go along. Now, having said all that, I think these last 6 months have taught us a lot. If you're this panel, and if I exclude my experience, we have 100 years plus experience in this panel, and I think it is very apt that we should, listen to them and understand, and they can share their experiences. But my first question is to Mr. Gandhi, who has, as you heard about his introduction, he has huge experience of, and tax is only one small part of it. He's looked at M&As, expansion, listing, treasury, everything possible. So my question to you, Mr. Gandhi, is that looking at the current pandemic situation, in the last 6 months, you would have looked at survival and revival both. So can you please share your experience with us?
Sure. Thanks, Bikram, first of all, for wonderful introduction. And thanks, Sanjeev, for an opportunity to portray our experiences during these pandemic times. I hope I'm audible to everyone.
Yeah. Absolutely, sir.
Okay. Like any other pandemic, this too had its own set of uncertainties and suddenness on outbreak, putting the complete economic activity to a total halt. India was no way different than the rest of the world. The implementation of lockdowns in India were very stringent and absolute sudden. You very rightly said on 22nd of March was the Janta curfew, which was just a prelude to the total situation, and 25th March on the lockdown 1, 2, 3, 4, and then of course we had the similar number of sequence of unlocking the economy also. However, within a couple of weeks after the first lockdown, F&B being an essential industry, the relaxations in logistics were offered, leading to start of some activity in our field. And coming back to the question of the survival, a company took all precautions. I'll give you the view on the industry, in particular to our company, which I faced and witnessed it from a very near situation. Our company took all precautions, keeping in mind large quantities of finished goods in the pipeline before the ensuing season, and keeping in mind the health advisories issued from time to time. I understand there was a time more than 200 advisories were issued from various departments of the government, how to do, what to do, when to do, and etc. And also to keep in mind the safety of our staff, which was very prominent, and also the social distancing, etc. And due to the spread of COVID-19, our volumes got severely impacted, and the investors were calling us on regular basis to understand on the survival, revival, and more particularly on the meeting of the various debt covenants, etc., which may be put up by our lenders. And the effect of this after the first lifting of the lockdowns or on the logistics little relaxation, the volume started coming back, which by August September actually it not only came back, rather has come back to the in a very resilient way to the growth path back. Highlights here were that our nimble-footedness and agility, we were able to liquidate the complete inventory of finished goods without taking any write-offs, and that was built up in the month of March in anticipation of the ensuing season. So this, which had put the everything to a halt, again, the sales volume started picking up by the end of the April itself and reached to the level of 25. And by the end of the June, it reached up to the level of 75% of the normal volume, which was in the last year. So the business was coming up. And then the like any other corporate, the innovative ideas of working from home and the reduction in expenses leading to lowering of fixed cost enabled the company to maintain at least its margin profile. We will be lucky if part of such cost saving measures become permanent in nature, and that of course will be a blessing in disguise, which may be margin accretive in coming years, because we have actually with the uses of the technology have been able to reduce a lot of our fixed expenses, and company could meet all its repayment obligations, including meeting all stipulated debt covenants well in time, which is a very heartening to know. And to summarize, we all are in the same storm, however, are sailing in different boats. How each one navigates their boat through this storm will, with minimum damage to our sails, will determine the individual levels of resilience. The ocean is vast and is not going away. Good companies will emerge even stronger after this tempest. This is becoming visible when we, read many articles. Somebody says it's a Nike type growth or V shape or K shape, and I think the latest out of this is K shape growth. The larger or the bigger companies will grow faster, and the smaller companies will face more time. I think this is in a nutshell my take on this. Yeah, Sanjeev.
Thank you, Mr. Nadi. I think it's good to hear that business is coming back, and you've been able to liquidate stocks in a timely manner. Shifting to you, Sunil, for a minute, looking at the changing landscape, I'm sure your client would have a lot of concerns. Can you just tell us some key challenges or experiences dealing with the client concerns?
Well, Sanjeev, with actually a very relevant issue, and frankly, we had a mixed bag of suggestions and issues that came up. In the beginning, when the pandemic struck, as Mr. Gandhi also said, it took all of us by surprise. There were issues on basic survival, right? So anything and everything that was an unfinished agenda for us. For example, just before the lockdown happened, we were dealing with evolution of dividend distribution tax, how to manage and how to help companies realize the full potential of the new provisions. That was being discussed. That was in a limbo. Obviously, people were not very clear what's going to happen next. Should they move forward or not was the question. The other surprise element which we saw in the budget was equalization levy. That obviously became a big issue because everybody was trying to move towards an online system, and here you were talking about a tax. So the e-commerce companies that we were dealing with were also reluctant to sort of take the next step forward. And then there were genuine normal concerns like expats who were stuck in India, companies whose people were stuck in India, issues on simple issues on residency, POEM, permanent establishment. What happens? My people are stuck at the site. What is going to happen to our P status, so on and so forth. Issues of force majeure. Mr. Gandhi also spoke about the covenants that were brought into discussion. So force majeure. I don't remember that I had referred to Suresh Nanda's High Court case. Before in the last 6 months, I may have referred it to maybe more than 10 times. I just wanted to give my clients assurance that look, this is what happened to Mr. Nanda by the High Court, and you're in safe hands. So anything happens on the residency part, you're going to be safeguarded. And then the government came out with a notification. So initial reaction was a bit of a knee-jerk reaction. we were trying to deal with issues as they were coming. But in the long term, as you also said that we have all evolved, and companies have realized that the strength, there is a need to build up strength on the tax function. So people are now discussing, our clients are now discussing long-term strategic issues with us. For example, how to build a robust transfer pricing environment for us, for example. So, we've seen in the last 6 months, the only thing which has come to our rescue is technology. And given that technology will be at play in whatever we do, so transfer pricing people thought, we need to have a long-term strategy for that. That was one. And when you talk about tech, look at what has happened with the faceless, assessments and appeal part. So I think the discussion has been more towards transfer pricing and how tech is going to take shape in the years to come. And I think this has been an eye-opener for us. Last 6 months were a huge learning platform for all of us. So that would be my take for it.
Thank you, Sunil. I think you've touched upon a few areas which I think we'll probably discuss in a little more detail as we go along. Transfer pricing is one area which you mentioned, and I think, yes, there are a lot of opportunities for the consultants, and I think a lot of issues which the industry and the consultants both will have to face in the changing world. I'll now shift to transfer pricing for a minute, and I think my question would be first to Arvind, and then I'll go to Samajit also. So Arvind, my question is, COVID-19 has brought in a lot of issues. What are some of the key, so I have two questions to you. One is, what are some of the key impact areas on your industry from a TP perspective? That's question one. And the second question, which I would like your input is, you would have negotiated, or the industry which you work in would have negotiated some APAs in the past. And all APAs would have key assumptions. Do you think you are going to renegotiate those APAs? Your thoughts on these two questions, Arvind.
So thanks, Sanjeev, and good afternoon, everyone. I think let me just start by saying that the current pandemic has been unprecedented. It has been more like a black swan event and has inflicted huge costs worldwide, worse than the 2008 financial crisis. Due to the pandemic, the dynamics of doing business globally has undergone a significant change. In these testing times, I think businesses are facing various challenges, including those on the transfer pricing front, especially in the case of MNCs having international transactions. So a very basic example, finding reliable comparable data for determining the arm's length price of transactions which have been undertaken during the pandemic period. That's to my mind going to be a difficult task. Again, depending on the nature of the industry, these transfer pricing challenges are going to vary. For example, a number of MNCs have their captive centers in India as part of their global structures. It is likely that these MNCs may find it difficult to sustain the fixed cost plus markups that have been agreed in the past for remunerating their captives, and hence they may be exploring avenues for reducing such markups. Besides owing to the economic slowdown, I think the MNCs may like to revisit their existing intra-group credit policy in terms of what is the period that's extended to the Indian captive to realize the receivables from their head office. Another issue I think which is worth considering is treatment of unutilized capacity costs or certain extraordinary expenses like rental payments for the period where the office premises were unutilized, either owing to lockdown or owing to the employees working from home. Certain abnormal overheads which are incurred owing to the pandemic period. So as regards these costs, whether these can be recovered on a cost-to-cost basis while invoicing to the head office, or can be treated as non-operating and hence not invoiced at all, is something to my mind which is not known at this point in time. I would expect that the Indian government should come out with certain guidelines to address these transfer pricing issues, similar to certain other countries like Australia, New Zealand, and Singapore, etc. Till such time, I feel it is advisable for MNCs which intend to revisit their transfer pricing policy to carry out an in-depth analysis and prepare robust documentation before adopting any change. It should be ensured that the justification for any change in the transfer pricing policy must form part of the global documents like master file, CBCR, given that these are more available to the tax authorities across the globe where the group may have its operations. At the same time, while doing so, just a word of caution, I would say MNCs should not jeopardize the basic characterization of a captive service provider being exposed to limited or low risks, and should not therefore come out as a full-fledged entrepreneur. So that's more on question number one, Sanjeev, that you raised to me. Coming to question number two on APAs, and I think we all agree that APA is an effective tool for obtaining transfer pricing certainty. It has been a very successful program of the Indian government. If we look at the statistics published by the CVDT as part of the annual APA report card, IT/ITS sector is predominant in terms of the number of concluded APAs. Coming to the COVID impact on APAs, I would say entities which are in the process of undergoing an APA may find it relevant to discuss the COVID-related TP challenges with the APA authorities, make a request to do away with the physical site visits and do a virtual one when the corporates are allowing their employees to work from home. And try to agree different arm's length price for COVID impacted years. I know this is going to be a challenging task given my understanding that the Indian authorities are typically not fine with the idea of having different prices for different APA years. On the point for which you said, Sanjeev, about the signed APAs or the concluded APAs, I think these entities may also want to approach the authorities for revisiting the terms of the APA or revising the critical assumptions, which anyway is allowed as per the law. Since anyway, one of the critical assumptions in any APA is consistency of business environment and the FAR analysis of the taxpayer across the entire APA period. I believe the AP authorities are likely to be considerate, which is supported by the safe harbor rules, which were applicable for more than 1 year in the past. But this time the CBDT decided to announce the rates only for 1 year, 1920, and it is expected that the rates would be revised for future years based on the COVID impact. Again, if we look at the international guidance, countries like Australia, Singapore, which have come out on the APAs, it has been suggested that the taxpayer should assess whether there is any breach of critical assumptions based on which an APA was signed. If that is the case, the taxpayer has been advised to notify the authorities and provide an analysis of COVID impact on existing APA. Mind you, these guidelines do acknowledge that in case of uncertainties, it may be difficult to progress an APA application further. And therefore, the APA process may need to be put on hold or even terminated. Hence, I reiterate my suggestion for CBDT to issue guidelines in a timely manner to avoid inconvenience to the taxpayer and at the same time prevent litigation, which is in line with the objective of the Government of India to provide a non-adversarial tax regime. So thanks. Over to you, Sanjeev.
Thanks, Arvind. I think let's hope someone in CBDT is listening and they should come out with some guidelines in a timely manner. Shifting to Somajit now, your industry, like some other industries, also are deeply impacted. Aviation, hotels, hospitality, etc. But aviation is deeply impacted. Are you also considering entering into APA or exploring safe harbor rules during these absolutely unprecedented and uncertain times?
Yes, Sanjeev, I agree that there has been adverse impact on aviation industry in the last 7 to 8 months, and this is really threatening the survival of many of the entities who are part of the entire supply chain in the aviation sector or manufacturing of aircrafts. So yes, I believe that's the case with many of the organizations in very different industries. And so now the point is that there is an urgent need to adopt cost containment measures in the entire supply chain to optimize the pricing. Essentially, most of the customers in the supply chain, they're trying to negotiate with their suppliers. Yeah, and as Sunil said, are applying force majeure clause, which were not much heard of earlier, or it was just in the SLA or some agreement, but never applied. So force majeure clause, applicability of force majeure clause is easy in a unrelated, in a transaction between unrelated parties. But when it comes to a transaction between related parties, the question arises how to align the same with transfer pricing principles. So essentially, the moot question is if two related parties try to align the pricing to factor the economic scenario of COVID, would that be accepted in a case of transfer pricing audit, or authorities would try to take a different stand, and thereby the tax cost may arise in future. So this leads to taxpayers not taking any position on force majeure, like in a related party transaction. So my point is that CBDT should come out with some guidelines in order to realign the pricing um, on the lines of safe harbor. So that will help to tackle the current situation. Further, the threshold should be expanded, and that would help a large number of organizations to evaluate and take shelter under safe harbor and to sail through the current situation. I mean, that's what I think CBDT should come out with some guidelines in order to allow various taxpayers to go for safe harbor. I mean, we are also kind of exploring and expecting something on those lines from the authorities. On the second question of APA, yes, APA, that's another way to like to have certainty over tax costs in a transfer pricing matter. And wherever there's a APA in place, or the taxpayer is into a discussion with the tax authorities, they can put forward a request to align the current situation. And what I've heard from various consultants and in forums, that Indian APA authorities are considering this kind of request from taxpayers favorably. So there is a possibility to factor the current economic scenario in case of an APA as well. And Airbus as an organization are exploring all of these options.
Thank you very much. Thank you, Samajit. I think listening to the two industry experts, I think what I'm hearing is that they are looking at renegotiating the APAs, and I think the expectation is that the CBDT should come out with some kind of clarifications to, again, less litigation, no litigation, as their motto is. So my question to you is, now you look at the current scenario, do you think all the companies who have these transfer pricing arrangements should reconsider their TP approach? That's question number one. And how should they go about maintaining adequate safeguard from future tax inquiries? Because that's the second question which bother all of us. So these are two questions to you on the TP, which I've heard the industry experts. Let's hear the consultants' side of it.
Sure. I think a one-word answer is obviously a big yes. Given that the entire ecosystem has changed, and Arvind and Swamijit have said enough about it. Given that you see, not just markets, the entire economies have changed. The global supply chains, the profitability, your production lines, your target markets, your customers, your product life cycles have changed. There is an inherent need to relook at your transfer pricing. That is besides, the issue is that this is something which must be done. Now, what is it that you can do in addition to that? When you go through this entire process of disruption, of market disruption, economic disruption, this is also an opportunity to sort of unlearn and relearn the entire process again. So just to answer your first question, Sanjeev, you said, should the companies be doing it? I would say not just because of the current situation, for the sheer fact that you have an opportunity to relook at all the critical elements of your transfer price, all the critical assumptions of your business. You have an opportunity to relook at all your intercompany agreements. This is just the right time to do it. Also, given the fact and take cognizance of the fact that authorities around the world are willing to accept the COVID impact. And this may be just the right time for you to sort of relook at your business, unlearn and relearn new processes. So that is something which companies must do. In terms of safeguarding yourself, I think my suggestion will be, Arvind also said that robust documentation has to be in place. We all expect that the CBDT will come up with clarifications, but perhaps one could take cue from the Singapore IRA. Singapore IRA has very clearly said that it's an advisory to the companies in Singapore that when you submit your TP documentation, make sure that you very clearly outline the impact of COVID on all the critical assumptions of your business. And whether or not CBDT comes out with a clarification, that would anyways be a very healthy practice, in terms of safeguarding yourself. So besides ensuring that you are protected by way of documenting the entire audit trail in the documentation that you produce, capturing the impact of COVID into your documentation, I think will be most critical.
Thanks, Anil. Yeah, thanks, Anil. I think documentation is always will be a key to any litigation in our country, and I think contemporaneous documentation will be more critical as we go along. And I think Arvind mentioned, and I agree with him, that there should be some difference for COVID years, and whether the COVID year is 1 or 1.5 years or 2 years, only time will tell us. But certainly financial year 2021 is COVID impacted, and I think there should be separate reasons for looking at a lower margin or a lower cost plus models, etc., etc. Shifting gears, Vivad se Vishwas. So I will not go into the scheme in this paucity of time, but I think my question to you is, Swamijit, you work for a large multinational. What are the situations and considerations whereby large corporates or MNCs may want to opt for the scheme? Because the CBDT wants to reduce litigation and they want to really, they're selling it as something which is a bonanza for the SSC. What should the corporation look at? What are the considerations or situations which you would look at when you're looking at Vivad se Vishwas?
Yeah, Sanjeev. Tax litigation in India is quite long drawn, and generally tribunal is considered to be the forum where taxpayer can get some favorable rulings. And as you know, it takes on an average 8 to 10 years to secure a ruling from the tribunal. So there is it's time and cost consuming to get a ruling on the merit of the case. Further, from the same forum, there are contradictory rulings. So even there is a little bit of uncertainty over the outcome of the ruling. So these are the two uncertainties. I mean, uncertain outcome and the number of years it takes to secure a ruling are two downside in case of a tax litigation in India. So Vivad se Vishwas, this scheme or this tax amnesty scheme is going to come for the rescue of the litigations which are very old of the taxpayers, because it is giving a certainty over the tax cost. You just need to pay the taxes, and it is also incentivizing by way of waiver of interest and immunity it provides for the prosecution from penalty. So this is a good scheme to close the long drawn tax litigations for an organizations. And as an MNC, we would think to go for a VSB in order to have certainty over tax cost, and of course it gives a waiver of interest and penalty. But as a tax professional, I would like the matter to be heard on merits and not to be decided in a VSB scheme. And then my my recommendation would be that we should have a independent dispute resolution mechanism, an authority who can take up independently and decide the case on merits. And at this point, I can recall that when DRP was formed way back in 2009, and the expectations were something similar, that it will act as a quick dispute resolution authority. But I believe the outcome from DRP has not been that encouraging for taxpayers.
Yeah. Yeah. Thank you. I think quickly moving to Sunil now. I think this scheme was launched about 6 months back. Though unfortunately we've gone through this COVID situation during the last 6 months. But what is your take on the success of the scheme as on date? Because some people will look at it today uh, as to what is happening on this dispute mechanism. Your take on this, Sunil? Have we lost Sunil somehow? Okay, I think I'll park this question. I'll come back to Sunil as I see him once he rejoins. Quickly moving to the next issue, which is looking at the time, we're just running a little short of time, so I would request my panelists to be slightly a little more brief. I'll now go to the next issue, which I was looking at on the faceless assessment and faceless appeals. Both are going to be faceless now. Arvind, my question to you is, what are the key challenges which are envisaged from an industry perspective when you look at these two schemes?
I think, thanks, Sanjeev. I'll maybe want to start off by complimenting and applauding the Indian government for launching this faceless assessment and appeal scheme as part of the initiative on transparent taxation, honoring the honest, which was unveiled by the Prime Minister in August this year. The intent is to eliminate physical interface with the authorities so as to impart greater efficiency, transparency, and accountability. I think at the same time, there are certain concerns in the minds of the industry regarding the effectiveness of the scheme. And I'll want to make a few points here which might be relevant. So first and foremost, I think which everyone has been talking about is the physical interaction. So we all know that there will be no physical interaction with the authorities, whether it is assessment or appeal, except a VC hearing, which can be provided only in exceptional cases to be notified by the CBDT. I think it is of utmost importance to ensure that the submissions which are being filed by the taxpayer with the authorities, they are comprehensive, well drafted, and self-explanatory. Second, a legitimate expectation of the industry is that such VC hearings should be liberally granted in complex matters like transfer pricing, M&As, valuation, etc. Otherwise, a faceless regime, in my view, could increase litigation and may also be challenged on grounds of violation of principles of natural justice for not providing a reasonable opportunity of being heard to the taxpayer. Thirdly, I would say it is industry's apprehension that involvement of multiple officials in the faceless scheme that may result in the matter being decided in favor of the revenue due to the absence of unanimity amongst the officers, like what has been experienced in DRPs, and Somajit did refer to that in his earlier comments. Since the entire proceedings would be undertaken in a time-bound manner, it needs to be ensured that the details, supportings for various tax positions which have been taken by a taxpayer, those should be readily available, again in a robust and a timely manner. And for this purpose, I would expect that the taxpayers' IT systems, they need to be upgraded so as to enable a seamless exchange of information with the tax office. And lastly, I would say with the introduction of a technical and review unit that has been created under the faceless regime to provide technical inputs on certain aspects, it may possibly result in a standardization of tax adjustments based on emerging trends, some of the industry issues, etc. And therefore, there is an exposure in my mind that if such adjustments have been missed out in past years in a particular case, it could result into a reassessment for that taxpayer. Having said that, I believe India is perhaps the first country that has rolled out such a system of conducting faceless assessments and appeals. And I hope that the government has taken note of these concerns from the industry and duly addresses them as the faceless regime picks up pace in the future. Thanks.
Thanks, Arvind. I think you made some very good points. The scheme has been just rolled out. And I think the government of India, the CBDT, is open to any suggestions as we hear them, when we talk to them, that any good suggestion, please come back to us. We are open to listening. And they are open to, they're reacting also. So let's hope some of the suggestions you made reach them also, and they will act upon it. This was the, on the faceless, but let me just ask Mr. Gandhi. I think faceless things will require a lot of coordination in the back end, coordinating between various offices, various teams. And I think that would require a change in mindset at the client's office also. What are your views on this, Mr. Gandhi, from the industry perspective? You're sitting with a very large group. How do you see this change impacting you?
Yeah, Sanjeev, as you rightly said, it's just in August, September it has launched, and we have yet to see, and even the department is yet to come out with a lot of clarification. The first thing which is needed here is the hand holding in the transition, so that the transition is smooth and people are able to appreciate fully. Department should come out to with a series of frequently asked questions and their answers to educate the people, and also certain clarifications like video conferencing, etc., where in exceptional cases what will qualify for to be eligible for video conferencing, and if there is a video conferencing, will it be recorded? If it's recorded, for the reference or for going for further appeal, like a copy of the same may be required by the SSC. So there is no clarification whether the SSC for their own proceedings will be entitled for that or not. And if it's going to be a video conferencing, it's only virtual difference instead of faceless. I mean, there are few things which are yet to be answered. But yes, from the corporate side to be preparedness, one thing during COVID, it was a blessing in disguise. People have learned how to use the technology to its utmost. And people have also learned how to prepare themselves and carry themselves so that they are effective even if they are at a distance, if they are not even they are not personally present. So that means they have to be concise, they have to be focused, they have to be fully prepared, they have to do their homework at the back of it, and any statement which they're submitting to department, if they know that they maybe this is the last opportunity they are getting it, they will devise by using the inputs from their IT to the 100% extent, so that they are fully prepared. And yes, in spite of that, there may be situations where their legitimate claims may be overlooked or may not be appreciated fully in the light in which they understood while incurring these expenses or claiming the deduction against the same. So the opportunities should be used to address those things. And if it happens in this way, I think this will be a very welcome change. And at BBL, we are really excited and actually welcome this move of the government. And it's another feather, in the hat of the government, where whatever they promise, they actually are doing the same.
Thank you, Mr. Gandhi. I think it is. Let's hope it is faceless and painless also. That's the probably someone commented. As long as it is faceless is fine, but it should not come with a lot of pain. I can assure you there will be some teething problems, both sides. I think we'll have to get used to it. The department will have to get used to it. But one thing I feel is that, as Arvind pointed out, the quality of the orders will be much better. The client and the consultant will have to do more hard work in their submissions, because there will not be any time to go and explain. So I think it's going to be challenging for the industry as well as the consultants both. And let's hope we are able to achieve more reforms. I think we talked about a lot on technology. So my next question, and Sunil, there's one question which I parked for you. I'll come back to you a little later. On the technology, there's an increase in compliance burden all across the world. Digitization is taking over. Everything is today. Your e-filing, your e-returns, your e-GST, everything is automated. So my question is to all three of you, Mr. Gandhi, Arvind, and Somajit. How do you see the tax function changing in your offices? Looking at both compliances and technology bringing in the changes. Starting with Mr. Gandhi, and then I'll come to the other two panelists again.
Yeah, thank you, Sanjeev. The rapid globalization coupled with the cross-border investments, these require tax laws to be simple and in sync with the global taxations. Because on the one hand, when you are want to attract an investment, your laws can't be much different from their home country. So therefore, the first is the tax laws have to be evolved and compatible with the international laws, or at least with the developed economies. Luckily, technology evolution has made it possible, and the process implementation on auto mode and faceless assessments, including the appeals, as we rightly just discussed, is a step towards that. And globalization brings its own complexities, of course, and the requirement to marry the existing practices to the international practices. This throws added challenges. In the new paradigm, CFOs are expected to look beyond traditional operating models to provide greater value to the businesses to keep pace with these advancements. And VBL is, as I said, is trying to leverage the technology to its utmost. And luckily, tax function is catching up faster than anyone else on the digital process. Testimony of the same is tax refunds generated during COVID period, which were valuing 1.23 lakh crores without any human intervention at all winning accolades all over the world. I mean, refers to such an magnitude without any interactions, human intervention was a very welcome change. So these things are because of technology are making possible. And now after the digitization of the tax function, there has been more transparency and convenience in tax filing. There are no filing camps, etc., which 10 years, 20 years back, or 30 years back, we used to see huge queues on the last day. And filing of online submissions, filing of online appeals, etc., is a step towards the same. And also, it's pertinent to mention that digitization has enabled the assessment process based upon 360-degree information, which post-linking of PAN to all high-value transactions and successful implementation of annual information returns without any worth mentioning transaction escaping scrutiny by the assessing authorities, which has led to stringent and near 100% compliance of all high value transactions. I think these are the few things which has happened really good in the past. Yeah, over to you, Sanjay.
Thank you, sir. Arvind, your thoughts on the tax function changes?
So I think, Sanjeev, I absolutely agree with you and what Mr. Gandhi said. There has been an increasing use of technology while undertaking the tax compliances. Globally, we are witnessing an environment causing a shift to a digitization of the tax function, which is triggered owing to an increasing thrust on the compliances and self-governance. Indian government is also committed to increased use of technology in various fields through initiatives such as creation of GST and being a unified portal for GST interface and compliance. Is use of technology for risk profiling of the taxpayers to conduct targeted assessments. Recently introduced faceless regime, digitization of the tax department and the tax records. So there are multiple initiatives that have been taken. And in fact, I would like to quote what the Honorable Finance Minister said in her budget speech this year. She said, data is the new oil, and that's what we are experiencing across the globe. So if we talk about the taxpayers community, the corporates are also adopting a number of technology tools for tedious and time-consuming tax processes like data collation, TDS management, GST reconciliations. These activities and tax compliances are being undertaken with lesser involvement of human resources from tax team and more involvement of technology-enabled tools. Besides, there is use of technology for different tax-related aspects like monitoring the compliances and escalations, for assessing the permanent establishment risk owing to employees cross-border travel across the group. Use of bots for GST reconciliation. So a number of tools that do exist. So coming to the question, Sanjeev, that you asked, if I have to predict the tax themes of the future, in my view, it will move away from more of human resources with mere tax technical skills to those of tax SMEs with additional skills to use the technology like AI and robotics and in tax function. There'll be intelligent dashboards providing high quality insights for decision making. This may not necessarily mean reducing the size of the tax team, but would rather require upskilling of the tax resources so as to be able to process and use the data for an effective decision making. So that's what my feeling in a nutshell about the future of the tax function.
Point well noted, and I think well taken. You will require people, but I think you'll need technology to support you and kind of help you in doing things faster. Absolutely right. Somajit, your thoughts?
Yeah. I believe like technology has enabled enabled to comply with the compliances. So like GST filing has become a click away now in the when e-invoicing is being implemented. So filing a sales return won't take much efforts. Tax team need not put. Likewise, I have already witnessed that GST refund has become smooth in comparison to the kind of efforts we used to put during service tax area. So I think technology is enabling tax function to comply with the compliances smoothly with less efforts. But technology again, in case of faceless assessment, tax function is to put more efforts to gear up with the documentation to meet the requirement under the faceless assessment. So both ways, on compliance side, taxing needs to put less efforts, but on assessment, maybe more efforts are required to be put by the tax team. So the future of tax team, I think it is more towards creating awareness in the organization, tax awareness, and to participate in the business decision making, because many of the tax disputes arise because of lack of coordination between tax function and the stakeholders who carry out the business decisions. So that is where tax team needs to be more involved to secure the future.
Thanks, Somajit. Sunil, we have heard three industry experts on what they are going through and how they envisage their tax functions or tax teams to change. You're a partner in a leading firm, having a large number of multinational clients, domestic clients both. How have you geared up yourself with this so-called, I would say, digital disruption, number one? And how are your clients addressing their queries on this tax technology front? So your perspective and how do you see your clients, reacting to this?
At the outset, Sanjeev, I must say that my managing partner will be very happy that we're discussing the technology part, because internally we have this push to sort of digitize alongside Mr. Modi's initiative of Digital India. So that's very interesting. Now, I think when you talk about technology, and I think all the fellow speakers have laid equal thrust on how technology can be leveraged to the best of your advantage, to your advantage. You have to look at two particular factors, and from a macro perspective. So you're talking about external factors and internal factors. What are the external factors that you're talking about? In a value chain today, you have vendors and you have customers on both sides, right? And if either of them are using any bit of technology, you are in between, and therefore you are bound to sort of look into that particular technology. And then a very critical external part is also regulators, and Arvind and all my fellow panelists spoke about how regulators are catching up. And Mr. Gandhi said we are moving in the same direction as the developed world. But let me tell you, it's not just a developed world. Technology today is not just the privilege of developed worlds. The most developed tax administration today in the world, as I know, is Brazil. Brazil has taken some very aggressive steps in the way they manage their tax function. So there is going to be a lot happening in the external environment, and how companies react to it is going to be a challenge. Look at India. GST is one part. ROC, the MCA is another part. Income tax is the third part. The way they talk to each other is a separate part, right? Information sharing, nobody had ever heard information sharing between MCA and CBDT 5 years before, between GSTIN and income tax. So today, the questions that your financials do not meet the reporting that you do under GST is a staple question, right? And that's because there is a lot of AI, a lot of big data analysis in the backend, which is being used, and these queries are put up. Tomorrow, you should expect a digital audit, right? Tomorrow, you should expect that when you go to the tax officer, a tax regulator, they should have a dossier with your profile on it, right? Those are the days that you are expecting in the next maybe 3 to 5 years. It's not too far away, because the amount of documentation that the government is sort of processing. Look at Project Insight. Project Insight is the classic case where anything and everything you do across the country, your social media profiles, your credit cards, everything is compiled and put into one particular source. So that's the external factor. Internal factor, as very rightly Swamiji said, that uh, businesses have to realize that technology is not just a tool to meet compliances, right? Today, I read a study which said that almost more than 50% of the time that companies spend on the tax function is towards meeting compliances. So what is your internal objective to sort of grow on the technological side? If it's only technology, believe me, you will keep chasing what the regulators are doing, and that is not going to serve you any specific benefit. You have to be one step ahead of them. And when you say one step ahead, it not necessarily anticipate what they're going to use. You have to use data smartly. For example, typical tools, very basic tools like robotics, the bots, the way they are used. I'll tell you how we use a simple bot technique. Uh, let's say you want to do a simple benchmarking study, right? One would use bots to do a long list, to do a short list, to extract companies from the MCA database, so on and so forth. Very simple, basic, repetitive job which can be done by a bot. Now, these are all covered. These are all covered areas, as we say, covered matters, as we say in tax. But one has to really think that the tax function has to participate in the decision-making function. Some of the tools that we are using internally, Sanjeev, and since you talk about our firm and the way we are helping our clients, we are using a very advanced documentation management system. It's 100% cloud. We are using a very advanced tax litigation management system, which obviously uses bots to log into every client's website every morning and try and download whatever new notifications are there on the website. Obviously, it's a mundane job which otherwise would have taken so many hours, so many people to do. That's already done. What you do intelligently with that information is a matter of, it's an intelligent issue. Whatever you collect, whatever you collect, whatever tax positions that you collect, how do you use in your softwares to give you intelligent information and something that your clients can also use? For example, one of the benefits that we use in terms of the tax litigation management system is that whatever we compile for a particular client, the client has the ability to access the information. Any tax orders, any disputes that have happened in the past, they have the information. And thirdly, want to see a trend happening in this. So I think the future is technology, and what you invest today will, and I cannot on the technological part.
Thanks, Anil. I think somewhere there was probably some connectivity issue. We could not hear the last one or two sentences.
That's my take.
Thank you very much, Anil. I think though we are coming to almost the close of our time, I have one or two questions on the tax function only, which have come. And those questions first I will address to Arvind and Somajit. Do you think this tax function is now going to change from, or should change from, compliance to advisory, keeping the risk perspective in mind? Because what I'm hearing is compliance. That's one side of it. But keeping the risk perspective in mind, how do you see this tax function? Will it move also from compliance to some advisory side also because of the risk perspective? Your take, Arvind, very quickly. We are already past our 4 o'clock time, but I think just a few more minutes and I think we can then wrap it up.
So I'll try to answer in a minute, Sanjeev. Maybe that's what I believe you would have allotted to me. So as I said earlier, I think in today's day and age, tax functions across the organization, they are evolving. They need to evolve to adapt to the complex and dynamic tax and regulatory environment in which a business operates. And since the last global meltdown, there has been significant change in the tax landscape with an increase in compliances, more thrust on self-governance, as the onus lies with the organizations to ensure complete, timely, and accurate compliances. And therefore, I think in this backdrop, I would say that to meet the stringent requirements of these self-governance and in this ever-changing tax environment, the focus of the tax team would shift towards effective risk management while ensuring transparency and demonstrating commercial substance to avoid questioning by the authorities. And therefore, if assuming any organization gets into some sort of a dispute with the authorities, these are the kind of things we talked about, robust and contemporaneous documentation. I think those are things which are going to support the organization in defending its claim before the authorities.
Thanks, Arvind. Somit, your quick inputs.
Yes, as I earlier also mentioned briefly, the tax function is evolving to manage the future tax risk apart from the current compliances. Like a advanced pricing agreement is a step in that regard to safeguard future tax risk on transfer pricing APA, or considering or to consider advance ruling wherever the issues are contentious and there is no clarity clarity from the various rulings which we have in our kitty. I believe the function of the tax function would be more on more towards the advisory and to manage the future risk of the organization rather than restricting on compliances. And further, in the context of faceless assessment really requires to build a robust documentation, and assessment comes 2 or 3 years down the line. And currently, the way we manage assessment is like at the time of assessment itself, we start interacting with people to build the documentation. That may be difficult in the way forward. So the building documentation should be concurrent with the transaction. As and when the transaction happens, we should keep building the documentation. So I think the focus is shifting in the context of faceless assessment to provide to manage the future risk of the organization.
Yeah. Thank you. I think I have two more questions very quickly. One to Mr. Gandhi, and then I'll come to you, Sunil, in the end. The question to you, Mr. Gandhi, is how do we structure our corporate teams to quickly evaluate and respond to our major tax and regulatory changes which are happening so often? Your quick thoughts.
Yes, Sanjeev, I will not take more than a minute. I know we are running late. See, tax is no more only a financial function in the organizations. It, of course, involves a huge taxation. Therefore, people have to be vigilant while, calculation tax and taking advantage of the tax benefits provided. It's more than that. Any mistake can be a reputational risk, which we did not touch. And because of reputational risk, it is no more only to a finance function. It has taken in most of the companies a boardroom matter. It has become a boardroom matter. And before that, it has to go through the rigmarole of audit committee, and where more than 50% under the law has to be independent director, and all the marquee investors make it mandatory for the companies to make it 100% with the independent directors. There, if anything in digital world through the social media, any adverse this thing immediately comes in the newspapers. And in the light of this, and in the light of reputational risk, this your tax head, there has to be nothing but the best. And having said that, is it practically possible? And most of the cases may not be. The best of the person may still be, because the changes, pronouncements are happening. We are attending here, courts may be pronouncing so many judgments even at this very moment. So, a person has to be on real-time basis up to date on new laws, new changes. So, and it requires expert domain knowledge. The head not only himself has to be on top of it, rather he has to be in touch with the consultants, and also keeping abreast with the new developments, maybe attending forums like this. I mean, and the organization, what we try to do is more a flat. Of course, the head supported with couple of principals and associates, but the takeaway is nothing but the best.
Thank you. So I think two questions, Sunil, to you. One, I missed out. We were discussing Vivad se Vishwas. 6 months have passed. What is your take on the success of this dispute resolution mechanism, this mechanism of Vishwas se Vishwas? And then there's one more question which has come, which you can address. Could you give any specific tax suggestions as to how to tide over the liquidity crunch created due to COVID? So one was related to the questions you're already discussing. So if you can answer these two questions quickly, then we can wrap it up.
Right. Okay. Can you hear me, Sandeep? I think I've dropped out a couple of times. Can you hear me now?
We can.
Wonderful. So I think I'll keep it short. So on the Vivad se Vishwas, I think the scheme is, I see it as a bumper scheme because none of the earlier schemes have met the standards that the scheme has set. I think it's a very clear scheme. And given that Indian landscape has the amount of pendency that we have in the courts, I think the finance minister made a observation in the parliament saying that there are about 900,000 cases, pending cases, which are sought to be redeemed by way of the scheme. And a humongous amount locked into the appeals. Keeping that in perspective, and if I am a corporate, for me it makes perfect sense because on one hand, I'm able to close my matters, I'm able to buy peace, it's end of litigation for me, and my balance sheet is getting cleaned, right? So imagine if this is the only sore point, if this is the only impediment to a takeover or amounts lying in the escrow account. So I see that a great opportunity to wrap it up. The way the government has approached this is also very, I think, very encouraging. They haven't had much success as of now, but as you've seen in the past, the success should only come in the last 2 months. We still have about 2.5 months to go. As of now, the numbers are not very encouraging, but given that people are still discussing this particular aspect, we ourselves are discussing about 15 applications, and only 3 or 4 have gone into the department for disposal. So I would imagine there are many more cases with other advisors, with other companies pending, and therefore this should come through. That's on the VSV part. On the liquidity part, I think liquidity, it's a very it's a perspective that you look into. But from a tax perspective, we thought that maybe COVID could, or this opportunity could either, from a tax perspective, help you to generate cash in the system or to preserve your cash in the system, right? So, for example, when you talk about generating cash, what sort of avenues do you have in terms of seeking a lower tax withholding certification, right? Typically, in EPC contracts, where you now see a lot of impediment in terms of people having stayed in India for a longer time, your costs increasing, right? Your earlier certificates not being valid for a longer time. Do you want to go back to the authorities again and ask them for a lower tax certification? That itself is a huge saving on the cash flow side. That could be one. Then there is a provision in the Income Tax Act where you could you have the provision of deferring payments of tax withheld. This is a provision scarcely used, but that's something you could explore. Any refunds that are pending, the government is very considerate towards giving refunds out, and I think one of the panelists said in the beginning. So any refunds that are pending, either on the corporate side or on the individual side, expat side, typically expats taxes are paid by the corporates themselves. That could be generating cash into the whole system. Then there could be basic planning tools whereby you could reduce, typically companies who engage expats. You could look at sort of, let's say, a typical provision like 1010cc helps to reduce the cost of the expat. So I would say you could easily generate some cash if you were to look at your balance sheet and try and see if there are measures that you could take. In terms of preserving your cash, switch to the new, the tax rate, the 22% tax rate, 15% tax rate, if that applies to your particular case. Examine various structures that are available which are available to you between a company and LLP. Now with the DDT gone, the difference is, not much. So do you want to sort of look into that? Last but not the least, transfer pricing. Arvind said, Somajit said, typically for a KPO or a knowledge center, the good old margins, or for an R&D center, the good old margins between 15 to 18 to 20 to 22% are not more valid now. You easily can go down to 8 to 20 to 12%. That itself is going to reduce your tax liability. So perhaps that would help you on the liquidity part.
Thank you, Sunil. I think a lot of learnings for, I think, at least for me, and I'm sure for the audience as well. I think I'll now hand over to Bikram to do the august duty of vote of thanks. Bikram, over to you.
Thank you, Sanjeev. Good afternoon, everyone. On behalf of ASA, I would like to extend my deepest thanks and appreciation to our excellent chair, Sanjeev, and our stellar panelists, Mr. Gandhi, Somajit, Arvind, and Sunil. Thank you all for sharing your insightful views and experiences on how to tide over some of these very important tax issues which are being faced during these troubled times. And this together has actually made it a very good discussion for all of us. A few takeaways from the session are that organizations need to focus more on having agile teams and integrating their tax functions with the ever evolving technology. The technology driven tax function would definitely help in maintaining robust documentation trails, which would ease the seamless compliance objectives, including the newly introduced dynamic faceless assessment scheme. Further, during these uncertain times, now companies may need to revisit their business segments and the tax positions adopted with respect to the transfer pricing and any other major tax issues. And they would need to maybe evaluate the options of APS, Vivad Se Vishwas scheme, or safe harbor rules for leveraging an environment of tax certainty going forward. I would also like to thank the team at ASA for putting together this event and this series. Manuj for ensuring the smooth rollout of this series, and Kim for her support in conceptualizing and organizing today's panel discussion. Finally, I would like to thank everyone who attended today for taking the time out and joining us for this session. If there are any further questions, please email them to us and we will get back individually to each one of you. We will be sending across a summary of the points discussed along with a recording of this session by tomorrow. Please join us next week on Wednesday, October 28th at 3 p.m. for the next panel discussion on business continuity risk management. We wish everyone a safe and blessed time ahead. Thank you so much and have a great evening ahead. Thank you, everyone.
Thank you very much. Thanks.
Thank you, Sanjeev. Thank you all. Thank you, Arvind.
Thanks.
Thank you so much. Thank you, Mr. Gandhi. Thank you. Bye-bye.